Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today we have John Jagerson with us. He's the author, co-founder, and contributor of Learning Markets. And if you want to learn more about the markets, you can go to www.learningmarkets.com. Lots of educational materials there. So I urge you all to go and check that out. John will be talking about how you can profit from any sort of market condition using FX options. Just want to remind everyone that if you want to learn more about options, you go to optionseducation.org. You should get a copy of the characteristics and risks of standardized options, and please consider taxes, margin, and commissions. These are very important factors prior to implementing any option strategy. Learn as much as you can about options prior to implementing any strategy. And again, you can learn all that at optionseducation.org or continue to come to fxoptions.com. A little bit about ICFX options. They're accessible through your equity options broker. They're exchange-listed securities. They're cash settled in U.S. dollars. They're European exercise. Of course, they can be traded as spreads. And we have both dollar-based and dollar quote convention. So we've recently, over the last 6 or 9 months, added a couple of new ones, meaning that we have the Australian dollar against the U.S., the British pound against the U.S., Euro against the U.S., and New Zealand dollar against the U.S., and the symbols are all right there, AUM, GBP, EUU, and NDO, and we have the traditional ones, the classics, as we call them. We've been trading those for a couple of years. Without further ado, I want to introduce John Jagerson. John, how are you?
I'm doing really well. I'm doing really well, Steve. Thanks a lot. I appreciate that. Before we, am I coming through okay?
Yes, perfectly clear. Thanks, John.
Okay, great. So before we jump in, I wanted to just do a really fast introduction for those of you who have not, that we haven't chatted before in these presentations. My background is in investor education primarily, and I got involved actually in the Forex because I had a firm that we had some exposure to some currency risk. So we were doing a lot of import and export, and found the Forex as a very interesting opportunity, or a very interesting way to very efficiently hedge some of that currency risk, and got more engaged. Wound up writing a book about it. You can get it on Amazon. It's been there for a few years. And currently, we do a lot of market content at our site, learningmarkets.com, where I'm presenting generally on a daily basis. We do events in the morning, actually, that are FX related. So you can sign up for live webinars each day about the Forex in general. Most of what we talk about is perfectly applicable to the FX options market, and in fact, in many ways, a lot of the strategies we talk about as we get ready for the New York session to open are particularly well suited for traders who are wanting to use FX options rather than, let's say, the spot FX market. So I'm going to do a couple of things here. I just want to, as we go along, if you have a question or what have you, feel free to chime in the questions box. I try to monitor that so that I can answer questions as we go along. I like to do things with live prices. I'm not a fan of PowerPoint because ultimately I would love to be able to have given you enough information that you can then take what we're talking about today and maybe paper trade it for yourself if you haven't done this. So let's say, for example, you're a Forex trader and you've operated mostly in the spot FX. It's a great market, but there are certain opportunities where it may make sense to use FX options instead of a spot position. or to supplement a spot position with an FX options position. So I hope to be able to give you enough information today that you can go and maybe paper trade a few of the ideas that I'm going to be talking about, or for those of you who have been options traders forever but haven't traded the Forex, I hope to give you enough information that you could kind of look for, okay, so here's how I might apply some of the things that I'm used to doing in, let's say, stock options or index options, and can apply it to the currency market. So I get a little asset class diversification. So as we go along, if you have questions, et cetera, make sure that you type it in. And if I don't get a chance to cover it as I'm going along, we'll take a little time at the end here to do some Q&A. So why don't we get started? And I'm going to do just something really quick here. So you'll notice on my screen, I have a chart of the euro-US dollar and exchange rate. Now, Steve just got done telling you that, that they've got the Forex options that are indexed to the dollar US or to the euro USD. In fact, so Forex traders are generally who are trading in the spot market with like a Forex dealer versus let's say Forex futures or currency futures. They're used to seeing the euro dollar quoted like this, with the euro first and the dollar second. And in fact, if you were looking to, so although I'm going to stick with the charts here that just graph the exchange rate, but you could bring up that index that those options are based on by typing in the symbol EUU, and all those symbols are available at the FX options site that Steve mentioned. He showed an example of all those symbols that are available. You can pull it up in pretty much any charting package at all, and you'll notice it looks virtually the same. So I just switched to take a look at the at EUU. Now I like to use the actual exchange rate itself, which is also very easy to use and easy to find. The only difference here, and this would probably be the only thing I want to point out, is that you'll notice over here in the right-hand column on prices, the Euro USD is priced as an actual exchange rate, which means that right now it's telling us that it costs $1.29 and 96 hundredths of a cent to buy a euro. So it costs that much dollars to buy a euro. And if we shift back to the index EUU, you'll notice that it's just, the only difference is that the decimal place is moved over 2 points to the right. So it's for pricing convenience. There's no problem with that. But when we talk about, Forex traders will talk about what's a 1 penny move on EUU. They'll talk about it as a 1 pip move. But they're the same thing. So there's not really, if you're familiar with one, you're pretty much familiar with the other. You just got to move the decimal place over. Except in the case of the yen, which we're going to talk about here in just a minute, which is really convenient because it looks the same whether you're looking at the index that the options are based on or whether you're looking at a chart of the actual exchange rate that Forex traders would use. So why don't we get started? I'm looking at the Euro USD, and one of the questions that I get all the time as traders are trying to understand a little bit more about, okay, well, if I'm forecasting, X, Y, or Z to happen to the dollar versus the euro or the dollar in general. In fact, most Forex pairs, they have a certain level of correlation because the majors are all crossed with the dollar. So an easy way to kind of visualize what you expect to happen would be to think about it like a seesaw. So I'm just drawing a really quick seesaw, and this is one of the most common questions we get. So if, for example, you thought the euro was going to improve, so the Euro USD, this is the exchange rate we're looking at right now. If you thought the euro was going to improve and kind of get heavier here, it's going to point this seesaw up. And that's what's been happening since about the middle of June on the Euro USD itself. Now, if you felt like the dollar was going to get stronger, then it would push this seesaw down, and the trend would then reverse, and we'd start seeing this downward sloping trend to the right. So you can just kind of think of the seesaw and put each currency in the pair on either side of the seesaw, and whatever you're forecasting, whatever you think is going to happen to the dollar relative to the euro or to the dollar relative to the yen or whatever it is, it's going to point that seesaw the direction basically the direction you're forecasting the trend of the exchange rate to go. So just a couple of quick tips there to make sure that everybody understands. If you don't have a lot of experience with the Forex, those are some really easy ways to think about it.
Get trading ideas, exchange rates, webinars, news, and commentary. visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.